Okay, recording this video on Sunday the 23rd of November 2025, just gone 4:51 AM Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. What a week! Whoa! Huge volumes, huge ranges, huge moves. I hope everybody traded it well. And what I've got on my mind this weekend is, holy hell, should I be worried? This is a lot of bad news coming out. And my charts are not necessarily saying that we should be worried. So I'm going to show you what I'm seeing at the moment. Obviously, this week we've got Thanksgiving holiday in the US. So that's Thursday's no trading. Friday becomes super light. And even Wednesday morning, midday, everything goes very quiet after that. I should warn you that in those low volume trading periods, particularly on the Friday, the professionals can wing it around by quite a lot in the market. So just because the volumes might be light, that doesn't mean the ranges are going to be small. So just watch out for that. But usually leading up to, starting this weekend, we have a bullish pattern because of a holiday, and this is one of the five or six seasonal patterns that we look at in the stock market. And Thanksgiving is usually generally good, bullish for the market, despite there being lots of bad news this weekend or leading up into this weekend. People talking about private credit, funds blowing up, and all this stuff. So just bear that in mind, that we've got this bullish overlay. Whether it works this year or not, wait to be seen. But I'll show you the setups on my chart in some unexpected areas. But before going to the Emini charts, let's just look at the correction crash indicator. I don't know if this is on the website published or not, but anyway, it's a really simple indicator where we just track the highest high of a particular market and then just mark a 10% correction line and a 20% crash line. And when the market goes through that trailing stop, it gives us a little text marker on the chart. It's a really neat little indicator, and you can see here the last correction crash that we had was the beginning of the year on the E-mini. I look at three things to look at these correction crashes. One, obviously, the E-mini and the equities market, Bitcoin, and Japanese yen. This one's flipped upside down because this is US dollar versus Japanese yen. When we have a yen carry trade unwind situation, that is when the yen goes higher and the US dollar versus the yen goes lower. So we can use the same indicator to mark corrections and crashes. And the point here is twofold. One is with the E-mini chart here on the left, we're a ways away from the correction. The correction is 10% move, and we're down maybe 5% from the highs, bounced a little bit on Friday. So we're a good ways away from a correction at the moment. That's not to say we won't reach it, but even with the bad news that we're getting, the correction crash has been muted on the equities market. By contrast, here's Bitcoin. Yeah, we easily sliced through from that top of, I think it was 126, what we got on this chart here. The high, yeah, 126 and a bit. On Bitcoin, we're down to 80. And did we see a 79 print this week? I'm not sure. Low, no, just 80 on that particular reading of Bitcoin. And the crash was miles away. But we've had corrections and crashes in the last 2 years, 2.5 years on Bitcoin every other month. You can see all the crashes and crashes. It's a super volatile instrument. And so, yeah, we're down big time on Bitcoin at the moment, maybe 30% from the top. And that's bad. But these shakeouts are frequent and not necessarily a bad thing. I mean, this is the activity that a lot of people after 07, 08 thought we should have had all over the place. Instead of the Fed stepping in and bailing out everybody, we should let the market find its level, have this activity where people are continually, bad players are pushed out of the market. And so this is a freewheeling market, if you like, versus a more managed market. And then in terms of the correction and crash on the yen and the reversal of the carry trade, despite equities being weak, we have nowhere near yen carry trade unwind. In fact, the yen has been weakening instead of strengthening, so the exact opposite of what we'd expect in an equities sell-off scenario. So that's interesting. Let us go to the E-mini daily chart first. Yeah, we're in an uptrend. To keep on banging on about this, but what's important is that on better sine wave, we didn't hold at the support on the lowest time frame there. So you can see that level there was 666 almost, yeah, 6655, and we've come through that. Yeah, we had some nice news with Nvidia, but we sold off after that. We're below that line at the moment. If one of these lines, support lines, don't hold, the next level down that we're looking for is support on the next highest time frame. So that is these slightly thicker lines here. These need to come together. They're a ways away before coming together, and I think that's my point, is that we're going to probably be caught by that next highest time frame. But that cross seems to be quite a ways away. I mean, sometimes these things can all of a sudden change direction, move down, cross, and get a bounce, but we're some distance away from that happening. So just bear that in mind, and that'll be some support here. It'll be a pullback in an uptrend between the level we're at the moment and 61.74. Most likely that's what happens, because we're in an uptrend in terms of the intermediate time frame, and we'll find a pullback support level in that intermediate time frame and then bounce from there. That's my expected play. But that'll take a while to happen. As we go down to the 135-minute chart, those are those lines that we're looking for. So it's the intermediate time frame of the next time frame up. On this time frame, it's the highest time frame. It's the thickest lines here. So in this time frame, yep, we're in an uptrend because we're above the cyclical resistance on the highest time frame there. We made our pullback to end of trend. We finally made it with a pullback to end of trend low, intermediate time frame. We're coming down to make support in the highest time frame, and it's when these two lines come together. And we're sitting at support here. The bars are white. We're in a downtrend. Typically, when we make this type of a pattern, we have a pullback to end of trend on the lowest time frame on this chart that syncs up with support on that highest time frame. And that means this level is important here, the lowest time frame, 6593. And it suggests that we'll go below that to make a pullback to end of trend. So somewhere in this region, we'll keep on going down and make pullback to end of trend. It's not usual for us to make lots of cyclical patterns and not have a trending pattern on the way down. And as yet, in this weakness that we've not had a trending pattern. We've not broken through, support to make pullback to end of trend. So that's a scenario. Here we've got exhaustion sell. This is exhaustion sell getting the move going. This is exhaustion sell potentially ending the move. We've got good blue professional bars down here taking profits, but also getting long. So that's good on the way down here, but we need to see a bullish reversal pattern there. So that's nice that we've started to see blue professional bars coming on the way down, which is good to hold the market and push back up. But that's not going to reverse and change around direction. I wouldn't be confident about that until we put in a bullish pattern after this. And we're just down here. We've got to make our way back to zero on this line on the 135. So I don't know, does that mean we're going to be bullish into Thanksgiving and then sell off after Thanksgiving and then finally make that pattern down here with cyclical support? I don't know whether we need that amount of time for these two lines to come together, hold the market in this region, and then bounce from there. 45-minute chart. So let's go to this better pro-am view, the volume view of the market. And every time we see big pro bars come in, they save the day. Weakness, big pro bars come in. Weakness, big pro bars. The backgrounds are blue, the bars are blue. The average trade size spikes up super high. Big players in. And now, with this week's activity, a lot of them coming in Thursday, Friday. I mean, yeah, we had the Nvidia news and we sold off after that, but here we go. We got exhaustion, sell, bullish divergence, a nice bullish divergence. It's not on the zero line, it's a healthy one at that point there. But the trailing stop is a ways away. We need to break through that to get a reversal signal there. But that's all good on the 45-minute chart. In terms of cyclical activity here, yeah, we've overshot support in the highest time frame. One little pullback to end of trend on the lowest time frame. That's not ready yet to come back up. We need to break back up through the 66.77 there, so it's not changed direction yet. So that's better on the 45-minute chart and the 15-minute chart. So here, again, if you go back in time, the big pro bars coming in back here was a reversal point. We strengthened from there. We didn't on this weakness get big pro bars coming in here. We got just a bounce from there into squeeze patterns and then we sold off. But this week's activity, a whole bunch of blue professional bars, big pro bars coming in here with exhaustion patterns. So that's looking healthy in terms of an area that we could reverse from. The background's in red, which means we're in an uptrend. We've had a signal on the 15-minute chart here. Cyclically, we're starting to end of trends down here, and we've got signs of strength. So 66.77, pretty key. If we get through that on Sunday, Monday, that'll be good. That'll mean for the time being this down move is over, and that'll line up with the strength that we'd expect coming into Thanksgiving. So that's all one picture. And then the tick bar chart. And I keep on banging on about this. It's like the bottom is not in until we see blue professional bars and exhaustion sells on the downside, which is why for the last 2 weeks I have said, no, the bottom is not in, the bottom is not in, because we haven't seen those patterns. Let me just back up 2 weeks. So the solid yellow vertical lines are the beginnings and the ends of the weeks. So this is 2 weeks ago, and into that low I said, no, the low is not in because we haven't had blue professional bars, and that was being gamed up. That was all the professionals buying up that breakout sequence out of that move and then getting short here. So the big pro bars were happening on the way up on the highs, and then we crashed from there. And then last week we had not a dissimilar pattern with the sell-off that we had. No amateur bars and Rambo patterns like we had the week before, but amateur activity at that point there, but no blue professional bars, no exhaustion sell. And I said, yeah, bottom's not in because of that. We need to see blue professional bars come in. And then we had a weak retrace. There's the blue professional bars on the stair-step trade. Bang. We go short into that move. And this looks a little bit more constructive with blue professional bars coming in here. Exhaustion sell, bullish divergence, Rambo pattern right at the end. But that wasn't enough. And then we had the Nvidia news here. And then we sold off again. And again, similar pattern to 2 weeks ago. Rambo patterns at the lows, no blue professional bars, no exhaustion sell at the lows. The exhaustion sell was getting the move going. Now, at the end of the week, exhaustion buy, bearish divergence, blue professional bars at those highs. We're rolling over, the background's in grey. So I would expect us to trade down to an exhaustion pattern there on the 13,500 tip bar chart. But that could be the test that we need into these lows on like the 15-minute chart that we bounce from there. So I think that's my scenario then for this week, is that we have weakness until we see that bounce, blue professional bars coming at the lows, and then strength into Thanksgiving. And then after that, I don't know, we'll have to look at what these lines look like on the daily and the 135-minute chart. It's like how close have they come together in order to signal that that's a bottom that we've got in there on the 135-minute chart. And this sell-off that I'm saying we need to see in order to get those blue professional bars in here, I don't know at what level that they trip up and come in. Is it just at 65.50 down here, or do we need to go a lot lower for those blue professional bars to come in on the 13,500 tip bar chart? So there we go. A little bit complicated. I hope everybody could follow me through that. It's interesting that this pattern seems to be just a ways away. It hasn't happened yet quickly. And so it's the timing of this. If these were close together, if these were down at the lows, and we'd seen a blue professional bar maybe pop up on the daily chart here on Better Pro Am, and these lines were a lot closer together, I'd be more confident to say, yeah, that's it, and we're going to use that holiday strength to power out of this. But that's my concern, is that these lines are still not come together and down at minus 100. So there we go. The beauty of three non-correlated indicators, everything has to come together for me to be happy. But when we only have one or two things like the big pro bars and the pro-am signals coming together without the other markers coming in, we have to wait for everything to line up. Okay, going back to last weekend's video, we talked about potentially having a bounce in gold and then followed by a bounce in silver and a bounce in Bitcoin, which was interesting to me, and then a bounce in Ethereum. And I forget whether I thought Ethereum was stronger or weaker, but anyway, it was a bounce in these gold and silver safety trades. Bitcoin, Ethereum somewhat was viewed a couple of years ago as maybe a safety trade or an anti-government debt printing trade. Now it seems to be just a liquidity trade, and market comes in and out. And I said look for signals coming up this week, gold and silver. They didn't happen perfectly on cue. So let me just show you this on gold. So here we go. We got our gold short signal 2 weeks ago into these highs, big pro bars into the highs, a flush pattern, we sold off. And then the end of last week, so that's the end of the week, last week we had nice exhaustion patterns, big pro bars coming in here at the lows, bullish divergence, we get a signal and just waiting for a test and was looking for a break back up above that. Well, the pros leg in and leg out of markets. When this level failed, they came back in again here. So still think that's good for an uptrend in gold. We just needed to come back down, from the 4,050 level to the 4,000 level down here, and the pro bars came in again, and we got a signal here. Run out of puff temporarily with exhaustion buy, bearish divergence, but because we haven't had blue professional bars taking profits up here, we're still in an uptrend. We're stair-stepping at the moment. So we stair-stepped up with this professional bar here. We stair-stepped up. We're close to that line at that point, but that looks interesting. So I think gold, funnily enough, as everything else is selling off, gold might be holding at 4,000. But so look for a break back through 4,100 first of all, and then 4,150 this week on gold. So that's interesting. Silver said was going to take a little bit longer. And so last week, some blue professional bars, but wasn't big pro bars. But here's the leg in. The leg in happening here. On the way down, big pro bars, the background's in blue there. Exhaustion, sell, bullish divergence, we get going a little bit, but that level fails, and ultimately we come down to 48. They come in again, we get another signal, and then this is exhaustion buy, potentially getting the move going. So let's see if we get through 50-50 on silver for a continuation of an uptrend there. Bitcoin. Now, the leg-ins here are miles away. So last week, I was saying, look for this area to hold. We don't have exhaustion sell at that point, but we had big pro bars coming in at that point. We didn't get a signal after that, and we kept on breaking down. Yeah, we tried here at 90, have a signal, some blue professional bars after exhaustion sell and bullish divergence come in there. But no, that level didn't hold at 89 or whatever it was, which psychologically was an important level. We come back down, but here we go. Whole bunch of big pro bars coming in here. Exhaustion sell, bullish divergence at 80, 82. Whole bunch coming in there. We got our signals. So let's see if we get strength this week. Let's break through 87, 88 on the way up. And people are pretty scared right now in crypto world. So this, for me, looks pretty good, pretty constructive. So let's see if we continue that break up. Ethereum, a little bit slower to break. I mean, we got on Bitcoin, we do have the signal come in here. We haven't had it yet on Ethereum. But here, down here at 3,000, and then they leg in again. Well, just one blue professional bar there and there. It wasn't enough to catch and signal at that point. But now, potentially, we have a signal generated, but we need to get through this high 2,900 and so on. So Ethereum. So it feels counterintuitive with all of the bad news out there at the moment to say, yeah, risk assets like Bitcoin is starting to signal, and then gold, which has been very popular for the last 2 years, is also holding. So we shall see. Let us just go to a couple more markets because I know this I witter on over the weekends here. Euro chart here, sold down beginning of the week. Big pro bars come in here, and wasn't a classic in terms of exhaustion buys, bearish divergence, and so on, but they were not keen at that point, so we sold off on Euro. One little big pro bar, the background's in blue there. No exhaustion sell at that point, so Euro hasn't held at the moment. British pound not going anywhere for the last 2 or 3 weeks. They've got a budget this week. I think it's on Wednesday, maybe Thursday, Wednesday. So I think that'll trigger some activity here, but no exhaustion sell, no blue professional bars at the lows, so it's weak at the moment, and that's a exhaustion pattern under the lip. So let's see if British pound sells off until we see professional bars, big pro bars coming in. Aussie dollar, on the other hand, though, coming in at the lows. No exhaustion sell down here, but the professionals are getting interested at 64.5. So exhaustion buy, potentially getting this going. So let's see if we trigger out of that on Aussie and get a signal long. Japanese yen, as I said, had a very bad week, kept on weakening, 63.50. No blue professional bars, and we're just bouncing off Rambo patterns and exhaustion sell, which is unstable. So, yep, no signal yet on Japanese yen. 10 years though. There we go. We're getting out of this congestion zone that we've had for the last 3 weeks, starting to break up. We've had a couple of signals long. All these exhaustion cells down here, whole family of them, flushes, exhaustion cells in that area is holding. So 10 years starting to strengthen. And then what have we got last? Oh yeah, crude and natural gas. So crude didn't catch last week. Big pro bars come in here, no exhaustion cell at that point. And we've weakened to 57. But natural gas, nice signal here. This was a good one for going short. Big pro bars coming in here. We sell down, and then down here at the lows we've strengthened, but it's not a proper bottom at 450 with no reversal of this big pro activity. Anyway, there we go. That's a long-winded video. If you've made it all the way to the end, well done. And good trading next week if you're taking Thanksgiving off. I do hope you enjoy it, being with friends and family.